Welcome back to another episode of An Entrepreneur's Journey. I am teaching you guys how to read the finance section. So basically how to read stocks and understand all those numbers that are above the chart when you look up a stock on Google Finance or Yahoo Finance. And in this episode, we are going to talk about two things. We're going to talk about shares and institution owned. So if you look above your chart on Google Finance, all Yahoo Finance, Google Finance, all these things have the same similar numbers on above or below them. And they say range, 52-week, open, volume, average. We went over a couple of these. We went over market cap. We went over PE, what PE stands for, price for earnings. We went over EPS, earnings per share. And now there's a little section here that says shares and another little section here that says institution owned, or it's abbreviated INST.own. So what are these? So if you want to follow along with me, it's November 30th, 2016. This matters because stocks change, right? The numbers change. So some of these numbers may be off, but if you open up GE, again, I'm not recommending any of these stocks. It's just for an example. Go to Google Finance, type in GE, and General Electric Company will come up. Today is trading at $31. Well, right now, $30.97. 95 cents, right? It's going to move. If it's between 10 a.m. Eastern and 4 p.m. Eastern, it's going to move. It's going to move. So what does this mean? Shares and INST.own mean? Shares is how many shares outstanding there are in the company. This means how many shares there are available for the general public to purchase. Now, they may not all be available to purchase because a guy like me may have bought some and not want to sell them. But in general, it's how many shares General Electric issued out. So why is this important? Because it's important to understand that you're only buying a piece of the company when you're buying a stock of a company. So, for example, today, General Electric says it has 8.85B, right, shares. If it says shares, it says 8.85B. What does this mean? This means there's 8.85 billion shares out there. So 8,850,000,000 shares out there. Now, if you go back to one of my previous videos about market cap, this is going to make a little bit more sense now because 8.85 billion shares outstanding, right? That means those are the company issued these many shares multiplied by the current price, which is right now $31, equals $271 billion. How did I do that math? I'm not a wizard. It's under the market cap, right? So how many shares outstanding multiplied by the current price of the stock equals your market cap? And we talked about this in the last video. Your market cap is how much the whole company is worth, right? So if you wanted to buy the whole company right now in a one sweep, you'd need $271 billion, right? Now, obviously, supply and demand will raise that price. So if you really wanted to buy that whole company, it would cost you probably more than $271 billion because there's supply and demand. The more people want it, the higher the price is going to go. So that's what shares mean. Shares is just a number of how many shares outstanding in the total company that are available out in the open marketplace. Whether they're purchased or available for sale is something different, right? But this is how many are out there that General Electric has issued and were now available for sale, and somebody probably bought them, right? Whether it was a broker dealer like Morgan Stanley, Merrill Lynch, or Barclays, or you as a retail investor went onto your Ameritrade, Scottrade, or any of these accounts and bought a share. So that's what shares mean. Now let's move on to INST.own, O-W-N. This is an abbreviation for institution owned. And a lot of stock displays like Google Finance, Yahoo Finance, Ameritrade, anywhere you're looking up a stock symbol will have this. And what this means is that there's a percentage of banks generally or institutions such as hedge funds, investment funds, equity portfolios that have purchased a stock. Now, why does this matter and why is this important? Generally, what this is telling you is that there's people with bigger interest out there in this company, right? So what it's saying, out of 100% of the stock outstanding, the shares that we just talked about, so here in this case is 8.85 billion, 55% of them are owned by institutions. What is it defined as an institution? Well, these are generally big banks like a Chase Manhattan, like a Wells Fargo, like a Merrill Lynch, like a Morgan Stanley, or like even a Warren Buffett would be considered an institution, Berkshire Hathaway. they have stock in this company. Why is this important to know, and why does it even matter? Well, what's important to know about institutions owning a stock is that generally institutions are not day traders for the most part. Some of them are, right? Some of them are going to come in and out of stocks at certain valuations. But what it's basically telling you is that there's major players behind this. That's the layman's way to put this, right? When somebody says there's 55, for example, with GE right now, it shows institution owned 55%. So 55% of the stock outstanding is owned by a major bank or a major institution. What does this mean? Well, if you lived in America, you've probably heard too big to fail, right? This is kind of the same principle. If you were a company and you have major institutions like Barclays and Chase and all these major banks owning your stock, there's a good chance they're going to want to keep that stock price up because their holdings are relative to their stock price holdings, right? So if they own $1 billion of GE stock at $30 and the stock goes down to $15, now they own $500 million worth of stock. They don't want to see that happen. And a lot of these guys, what they are called broker dealers or market makers. And market makers like a Merrill Lynch, like a Morgan Stanley, like a Wells Fargo, there's different divisions within these companies that are market makers, right? Or there's different divisions that are retail investors. But the market maker is someone who makes a market for the stock. So it basically buys and sells the stock. So if they see the stock start plummeting, it's to their advantage to start buying it off of the market, right? Because they don't want to see that stock go down to zero. They want to hold that price at a reasonable price, at whatever they think they're going to make a profit. So if they bought it at 16, they're going to want to keep it above 16. If they bought it at 20, they're going to want to keep it above 20. So all institution owned means is that there's major players holding that stock. Is this a good thing? Generally, yes. Generally, it's a good thing to have major banks involved in the stock that you're dealing with, right? Or major portfolio companies in the stock that you're dealing with. Now, this doesn't mean that the stock can't go down to zero. There's always a risk that your stock can go down to zero. But generally, institution-owned stocks are a little more stable, right? They have major backings. Now, this also means that there's major players holding a big bulk of stock. For example, here we have, in the GE example that I'm giving, 8 billion shares outstanding, right? That means there may be a major bank that owns, let's say, $1 billion worth, right? Or let's call it $100 million. What does this mean? This means that like any stock movement, the stock movement is based on the buyers and sellers in the market. If I wake up today and say, I need money, and I happen to own stock in GE, and I bought it at $15, and today it's trading at 31, I'm going to sell it, right? If I need the money. Now, if it goes down tomorrow to 18, or I'm sorry, if it goes down tomorrow to 28 and I bought it, let's say at 15, I can still sell it, right? I can still sell it and make a profit. My point is that buyers and sellers create the price, right? So that stock ticker going up and down is because someone is buying and selling at a certain price. Institution-owned stocks can dip low when an institution decides to sell it, right? So if GE has an institution owner like JP Morgan Chase, and they're holding on to 1 million shares, right? And we talked about volume before. Today, the volume on GE is 11 million. The average volume is 34 million, right? So if, let's say, for argument's sake, Chase Manhattan owns 50 million shares, they can depress that stock, right? There's not enough volume in there to sustain them selling 50 million shares of that company. So what's that going to do? It's going to drive the price down. So what you need to understand is that when it comes to institution-owned stocks, if an institution decides to sell out of their stock on any given day and they have a large enough position, it could be detrimental to the stock, right? It could drive the price down. Now, the same thing with their buying power. Because they have so much buying power, because they have billions and billions of dollars in the bank, if they decide to purchase a stock today, it could drive the price up. And we see this a lot when gentlemen like Berkshire, or like Warren Buffett or Carl Icahn, or big fund managers at these big banks like Wells Fargo and Chase Manhattan decide to purchase a stock. When you throw, a couple $100 million at a stock, it can drive the price up if you're buying it. But the same thing when you're selling it. So that's the basic definition of an institution-owned stock. That's what it means. It means that the percentage of that stock is owned by major institutions, right? And they're generally banks, hedge funds, investment companies. Sometimes ETFs are classified as institutional. ETF is an exchange-traded fund. It's basically a stock that owns a bunch of other stocks, right? So that's institution-owned. That's shares outstanding. Shares is the total amount of shares out there in the marketplace. In the next video, we're going to get to beta. So stay tuned. Hope you guys like these videos. If you have any questions, comments, concerns, write them in the YouTube section below. Follow me on Twitter @NicholasCoriano, and we will talk again soon. Thanks, guys.